Tesla's down another 1.5% today. And even though Nvidia had some great earnings, market's down after hours, Tesla's down after hours, currently sitting at about $203. Now let's talk about price action from today and if I still think that we're going to see Tesla recover back up to that $300 level. Now, if we zoom out, we look at the daily chart, the first thing that we want to talk about is market structure. If we take a Fibonacci from swing low of 170 up to swing high of 263, you're going to notice that the normal area that institutions are allowed to buy at is going to be between 190 and $203. This is called our institutional buying zone. The reason that this is an institutional buy range is because in this market structure that we have from swing low to swing high, the 0.618 and the 0.786 tends to be what's called our golden zone or that buying level. That is just a fancy way to say that if you look at the massive breakout, it's pulled back about 61% of the actual breakout. So that's usually a very good time to be buying up the dip in an uptrend. And you can see that last time we pulled back into this level, back between the beginning of, August 2nd to down about the 12th of August, we bounced right off of that institutional level and all the way back up to 228. Now, the level that we really want to see hold, which did hold last time, was called our smart money level. The smart money level is directly below the 0.786. This is the optimal trade entry. The reason for this is that Wall Street, big money, whatever you want to call them, they know that everyone's waiting to buy at the institutional buy level. So instead, they purposefully drive right through, they push price underneath that institutional level. They know that everyone has stop losses set, then they buy it right back up for pennies on the dollar. Now, these market structures happen on big time frames and small time frames. You can notice that if we actually take a Fibonacci retracement from swing high here down to most recent swing low, look at where our rejection was. Our rejection happened right at that smart money level. We could actually take this smart money section right here. Your most optimal time, if you wanted to go short, would have been right at about 224 with your take profits down at about 196 and $200. That was not something that I was playing simply because we talked about this last week, but the weekly market bias was still showing higher lows. If we were to close like this week, this will give us an indication that price will most likely continue to pull its way back down. Now, with that in mind, how far could we potentially fade? Well, if we take Fib from swing low up to this swing high, you'll notice that our institutional buy range that we should be looking for is sitting right between $200 and $193. This will be the level that if price pulls into that $200 zone, that we should be able to bounce at. The next level from there will obviously be our smart money zone at about $192. If this level were to bounce and hold, and we start to move back over 200, this is a clear indication because we've made now higher lows that we will start to move back up to 250, 260, and 300. However, if price sells off into a lower low and breaks $184 down into that 180 level, then we are not going to be looking good at all. That will show continued selling pressure on the market bias. That will show continued selling pressure on the BX trender. And on top of that, if we broke 190, that weekly market bias is broken as well, and the massive long-term downtrend will continue. I'll be honest, I don't think that's going to happen. I do think price is going to hold that $190 to $200 level, but we have to wait and see. In the meantime, I'm still holding my December $220 calls, and if we continue to pull back down to that 190 level, I will average down. I will keep you guys posted if I do close them out and roll them out to a longer time frame, but I am going to be bullish on Tesla for the next 6 to 12 months as long as this weekly market bias holds. If it does not, then we will abandon our thesis. We're not attached to this or attached to any stock, and we will move on. I hope this video helped, guys. If you want to learn exactly how I've been able to make $1.4 million so far this year, and we've actually had a pretty significant drawdown, which, drawdowns happen, and this month we're actually going to have a losing month. So if you guys want to trade with me and learn how I trade, go check out all of our free courses. The link is in the description. You can learn my exact indicators, how I price out options, and exactly how to understand options to a fundamental level within 60 minutes, as well as much more. And if you guys want to actually get access to my real-time alerts every single day, you can join the private academy. The link is in the description. I'll see you next time.